I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermeulen. His website is thegoldanoilguy.com. Welcome to the show, Chris.
Hey, thanks for having me, Jim.
What's happening with gold?
Gold has been, it's been building up a lot of upward momentum, and it continues to hold strong momentum. Overall, in the last couple of weeks, we've seen gold have a little bit of a breather. We've seen gold kind of fade back down a little bit from the kind of went all the way up, poked to a new nominal multi-year high, hit the $1,300 per ounce U.S. Level, and we've seen it just pull back slightly all the way to about $1,260, and it's been consolidating in a nice sideways, a very tight bull flag formation. And a bull flag is typically a bullish pattern that we're going to see the price continue to move higher. And of course, right now, price has been tightening, consolidating onto some key moving averages, like the 20-day moving averages, which should act as support. And I think we're on the verge of seeing gold really have a breakout run here that I think we could see $100 per ounce move to the upside to around $13.96. I have as my next upside target. And of course, right now we're trading at $12.73. There's a lot of bullish things that are unfolding for gold and silver and miners in general, them being kind of a safe haven. And really all the things coming together are, we've got the equities market, I think, has kind of put in a top. And when people become scared and selling will eventually start pretty heavy, I think, here in the stock market, people are going to move to the safe haven. And that is going to start to fuel the gold prices higher. And then, of course, we've got the U.S. dollar index testing. It broke down temporarily, or about 2 weeks ago. It recovered from that breakdown, but it's still trading right at that resistance zone, kind of testing that breakout, that break to the downside. And if the dollar collapses here, it's going to fall substantially, and it's going to really, I think, set the fire under gold and silver and miners, and we're going to see those. That's probably going to fuel the next major rally. If the dollar doesn't fuel it, it's going to be the following stock market. I think gold is inevitably going to go up here, and we kind of have good insight on that because the gold miners themselves continue to outperform, and right down to the smallest, the juniors. The juniors continue to outperform even the larger gold caps, large cap gold stocks. And all those things are pointing to, much higher prices for gold. And we haven't seen this kind of excitement in the gold sector in a long time. Lots of money is flowing in. Lots of things are favoring gold. There's lots of uncertainty with, Trump and all these wild cards coming into play. So, I really think we're going to see gold become a very strong play here. And if one thing doesn't pan out well for gold, I think there's 2 or 3 other things that could support it or fuel it to go up anyway. It's going to be really interesting this summer and November as we kind of work our way into the election.
Well, Gerald Celente from the Trends Journal, who had said that Hillary Clinton was going to win the election, and the Trends Journal is usually very accurate. He was calling Hillary 4 months before Trump announced his plan to run for president. Now he's saying Trump might win. Yeah.
I kind of have a gut feeling that he's going to win. I don't know. It just seems like he's got the momentum. He's got the publicity. The guy knows how to get in front of the media pretty much on every station, every day, all around the world. And, he's not a politician. And that's probably what, nobody likes politicians. They're all BS. So maybe you get a guy in there who, if somebody tells him to do something, he'll just be like, I don't think so. You go do that. I'm doing what I want to do. And maybe not having a politician run things. I don't know. I'm just throwing it out there. It's just an idea. Maybe a non-politician could be a good thing, could be a complete disaster. I just glad I don't have any I don't have to vote. I'm not an American, so it's going to be interesting to watch unfold, no doubt.
Well, did you ever see the old British show called Yes Minister?
No.
Where a person gets elected prime minister and he has all these great plans to do things, and then his deputy would say, a professional bureaucrat, well, sir, I know you would like to up the welfare rate, but if you do that, it's going to cost the economy this much. You're going to have to up taxes by this much. And if you do that, you're going to lose all your support in the House of Commons and you're going to be voted out. Well, right. I mean, Trump may have all these great ideas, but he still has to deal with a Republican Congress who hates him personally.
Right. Yeah.
Yeah. So can he do what he wants?
Who knows? I don't follow politics. I could really care less. I'm not on that whole side of things. So I am very uneducated when it comes to politics and what goes on there. So anything I say, just take it with a grain of salt. I look at it from a distance and make my comments. That's about it.
Well, taking a look at oil now, what's going to happen with oil prices?
Yeah, oil has had an amazing run to the upside, and it's kind of forming a similar pattern, much larger time frame than what natural gas has formed. But overall, it's a major basing pattern is what I see unfolding. It's kind of crowd-based psychology. We've seen it kind of waterfall down from 2014, 2015. We saw kind of the waterfall sell-off slowly dissipate and drag out. The second half of 2015, we saw a much slower grind to new lows. Then we saw a double bottom in January, February of this year. And now we're starting to get a nice climb back up, and we're trading at a pretty critical resistance zone around the $48, $50 per barrel level, which is kind of the February previous bounce high. And I think we're going to see crude oil probably struggle here a little bit. I think we could see it consolidate. A lot of it, what's going to happen there, I think, is going to probably hinge on the U.S. dollar index, what it's going to do, because the U.S. dollar is setting up for a potential massive crash, a big fall. And, of course, as the dollar falls, we're going to see commodities in general, I think, kickstart into a bull market. And that, I think, is going to break oil to above that $50 per barrel level, the 2016, the previous bounce high we saw back in October. And I think we could be off to the races. So I am very bullish on gold long term. Do I think it could pull back and pause here a little bit? I do. But really long term, I do feel as though that tide has changed. And I think a little bit of a pause or breather here that could last for maybe a month or so, I think it could be bought into and have a nice play for upside potential.
The International Energy Agency has said it believes that the surplus in oil is about ended.
Yeah, I haven't followed that, but the charts are starting to show there's some serious. We've seen panic in the market. We've seen it in the charts, and now it looks as though we've got a very strong supportive price here. So the market typically leads. The price of oil typically leads kind of the news that's coming out or what's unfolding. So. We saw oil bottom back in February, and maybe it saw this ahead of time, and maybe I think the bottom is definitely in for crude oil. I think it's just a matter of waiting for it to break this $50 per barrel mark for its next kind of run up to the $60, $62 per barrel mark.
Does that have producers breathing a sigh of relief?
Oh, I'm sure it does. This has been a very strong rally, and they need this. Most people can't make money at $27, $30 per barrel. So the fact that we're getting up there, we're a long ways from them still most people being able to, companies to make money at $48 a barrel. We really need to see like that $72, $74 per barrel for the majority of, I think, North American companies to be making half decent money, big companies. But overall, I think the pain is kind of over. And now it's just a matter of, this is what you and I talked about a long time ago, is the question is how long does oil stay down here still? It's had a huge recovery. It's still at prices where these companies aren't really making any money. And if it stays below this $50 per barrel mark, I think a long time ago I was talking about somewhere between $50 in 35, we'll probably see it trade around here. It could flatline down here for several more quarters, depending on how things unfold. And sure, it's been a strong recovery, but these companies are still losing money on every barrel. Just not quite as much money. They're not losing as much, but it's still a terrible pricing. So I think we're going to see a lot of more pain for companies unless crude oil has a extremely explosive rally and gets back up into the 70s real quick here. But there's potential that there could be a lot more pain for these companies as crude oil just flounders down here for several more months, and more companies, eventually have to get forced out of business just because they don't have any positive cash flow.
Well, I've also heard, too, that the brain drain that I mentioned, and I think we talked about before, the guys who go out and look for the oil and produce it, well, they've gone out and found other jobs, and when production turns up again, they may not be available to actually, produce it or find more. Yeah,
it's funny. I had that conversation with one of my friends who is out in the oil and gas industry out west Canada here, and we talked about this actually on the weekend. He is looking to get out of that industry. He's got a pretty good little gig going right now, but he's looking to get out of it, and most of his friends that he's been doing it years with have already got out of it. They've been in the business a lot longer than he has, and they're like, this is it. This was the last straw for a whole bunch of those guys, and these are guys who had a lot of seniority. They were always the first ones called on the jobs, but, even if you always get called on the jobs, the problem is we could go years here with them not having any money income, right? Just because these rigs, they're closing down, they don't want anybody, they're running with a skeleton crew. So that brain drain, when demand comes back, production's probably going to be slower. I don't know how quick it is to train everybody to get all these skilled people back in place that knew a lot about each facility and how to do it in the grounds and all that stuff, but definitely going to be a major brain drain on a lot of the companies. That knowledge is not coming back, that skill.
And also traditional oil-related companies like Enbridge. Well, Enbridge has put in over $200 million into 3 French wind farms. So they're not counting on oil in the long run either.
Yeah, I didn't know that, but that's awesome. Yeah, that's great.
Yeah, a 50% stake in 3 French wind farms for $282 million.
Right. Yeah, I think the wind and solar, I think it's going to be huge. The technology is slowly getting there. It seems kind of like it's painfully, it's really slow, but it's coming along. I think, in another 10 years, we'll probably hit a major turning point, but, it's great to see the solar and wind stuff. I love the idea of clean energy. I don't know the whole story behind it, how clean it really is to produce the materials to make clean energy, the solar panels and all that stuff, but in the long run, I think it's probably really good for the environment.
Well, right here in one of Vancouver's shipyards, they're building a barge that will use tidal power. Doesn't affect the environment at all. It just floats up and down, and it'll provide enough power for 500 to 800 homes.
Wow. Yeah, that's amazing.
Yeah. So, you see governments here in BC, we have all this tidal power and wave power available to us, and yet they're going to the old-fashioned hydro development at Site C at a cost of $9 billion.
Yeah.
That may not be the future at all.
Yeah, well, things are turning. There's so many people pushing to find new ways to get energy, and like I said, I think that it's such a big process, and we need so much of the stuff, of the energy, that it just takes a long time to get things in places and to break the contracts with all these other companies that do it the old-fashioned way that are bad on the environment. But it's coming. People are trying. People are pushing. And companies are making that shift as a hedge against their current way of making energy, like to go to wind and solar. And it's great. It really is exciting to see that. It's going to be a huge opportunity down the road.
Well, I was dropping a friend off at a hotel near the airport, and I noticed the Tesla charging stations there at the hotel.
Yeah, that's pretty nice.
We'll have more with Chris Vermeulen right after the break.
I'm Larry Ray, President and CEO of American Manganese Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Chris Vermeulen. Chris, what's happening on the equity markets?
The equity markets are, I just actually posted an article today talking about how the tides have turned for equities. I've got all my cycle analysis that has been showing shows that we had the last little bounce yesterday in the equities market, specifically the SP 500, and we saw a strong bounce. I had all kinds of different things kind of popping up without getting too technical, but everything was screaming yesterday right near the highs that we're probably going to see a big wave of selling in the market, and I actually got short the market, bought the VIX also, and of course today we're seeing equities plummet with the Russell 2000 down over 2% at the moment. Huge drop today, but the tides have turned, the major tide, and when I say the tides, when we're in a bull market, that's a rising tide. When we're in a bear market, that's a falling tide. And I think all my analysis, even though the large cap stocks in the U.S. have not yet actually broken down in a technical bear market, the small cap stocks have already done that. The transportation index has already done that. Those are the two leading kind of indicators for what's going to happen typically with the large caps. And I think this is the tipping point. I think equities topped out about a month ago, and this is it. I think we're about to break a mini head and shoulders formation on the daily chart of the SP 500. We're about to see a precipitous fall to test those January, February lows back down near 1800. And the ugly picture is I have a feeling we're going to break that level, and we're going to see this same move again to the downside. I think we could see 1600 on the SP 500, which is about a 400-point drop from where we are over the next few months. So I think there's, this is one of those things I was talking about for gold, that when equities break this neckline potentially in the next couple of days here or tomorrow, there's going to be fear moving out of the market, and that money is going to move into the safe havens. We're going to see bonds start to firm up, which bonds to me I'm very bullish long term. We're going to see money flow into gold and silver and miners as the safe haven. Everybody's going to start piling out of out of equities in general. So I think the big money is to be made either shorting the indexes or buying inverse funds and looking to get long precious metals and bonds going forward.
What do you think of Warren Buffett's move to invest $1 billion in Apple?
Yeah. I don't know. $1 billion to him is probably kind of like, a couple $1,000 to us. $1 billion is a lot, but, I'm not an Apple person. I'm naturally not an Apple type person. I think Apple's got lots of potential, but it's really lost a lot of its oomph. And, it's been underperforming. I'm not a huge fan of the company. They have a ton of cash. They really just need to find that next bright idea, and they're going to be another massive success, and their share price will probably double or triple again. The question is, what is that? When is that? And I think the U.S. equities markets are just entering a major bear market that could last a year or 2 years. So it's going to be really tough for a stock to buck that trend. Typically, 3 out of 4 stocks follow the market lower, and even if they don't follow the market lower, they struggle to move higher. They'll flatline until that bear market is over. So I think buying equities in general, unless it's a safe haven equity like gold miners, which also have other things in favor like the falling dollar, which could add more value to its product, its metals that it's mining. I don't think equities is the place to be. It is if you're short equities. I think a fortune can be made here during this next massive bear market shorting stocks, because stocks fall 4 to 7 times faster than they rise. We've got a 7-8 year bull market. It can be wiped out in 1 year. So if it took you 7 years to make those gains, you could make those gains again, shorting the market and watching it collapse and wipe out those wipe out the gain that index made in a year or two. So I love shorting. Shorting's kind of my specialty. On the biggest up day in stocks, I'm the one who's out there and I kind of find these quick little shorts. I like shorting because you get instant reward if you're right, big, fast reward. If you're wrong, the market slowly grinds higher and you can get out. You can really manage your positions. And the long side I find is harder because the market usually grinds slowly to the upside and then boom, it drops really fast. So you can lose a lot real fast and it takes a lot longer to make the gain. So I'm a huge fan of bear markets. I'm a huge fan of downtrends and shorting the market in general.
Yeah, it's almost like a bathtub takes a long time to fill, but you pull the plug, it goes down pretty fast.
Yeah, exactly. Yeah.
What about silver? We haven't talked a lot about it.
Silver's pretty much in the same boat as gold. I think silver on a percentage basis has got a lot more potential than gold. It's trading at, $17.25 today. I think we could easily see it get back up to that $50 level, which, puts the returns much higher than what we would see of gold. So overall, I'm a huge fan of silver. It's got a pretty decent kind of resistance zone between $18 and $20 an ounce, but I think once it can kind of clear that level, I think it's off to the races. Potential-wise, I think it's better than gold, but there's a few, I like to own both, including miners, simply because gold to me is the real safe haven. I see days where silver's down, stocks are down, people are nervous what's going on in the world, everything is down except for gold. Gold is flatlining or slightly higher, and people see gold as more of a safe haven, as a store of asset, as a currency, and countries see it that way. Countries accumulate massive amounts of gold. So to me, gold is kind of the ultimate safe haven, but as you know, the safer something is, the less return you get. So I like a mix of them both. I think silver is the speculative play, and gold is kind of, you can put more money into it as your safe haven and put some into silver to get that extra juice and excitement.
Chris, thank you very much for chatting with us.
Hey, always a pleasure, Jim. Thanks for having me on the show.
My guest has been Chris Vermeulen. His website is thegoldandoilguy.com. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. Our popular YouTube channel is Talk Digital Network. Comments or questions for the show can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.